Here come the big US labor market figures. How is the dollar going to react, guys? Ken Chigbo back with another E8 Markets fundamental update. Let's jump straight into this. So starting off with the US dollar, it has been on an upward trajectory for the last few weeks. And the reason being is because we've continued to see a pushback from the FOMC with regards to rate cuts that markets have been wanting so desperately from, if you look at the back end of last year, the way we were pricing in rate cuts for 2024, like almost every month, they wanted cuts consistently, just because there were signs that inflation was topping out late 2023. But the fact of the matter is, it still remains elevated. When you look on an annualized level, inflation is still running well above the FOMC target around that 3% level. They want it down around 2%. So there's still some way to go. And how do we get there? We keep rates higher for longer. Now, where a lot of volatility is happening at the moment for the dollar is with the September pricing, where there's about a 64% chance probability of a rate cut. That's what markets price at the moment. Now, look here, just before we look at fundamentals, technically you can see, as we've been going over, and we've covered this in recent weeks, the path to the upside for the dollar, how structurally we are to the north, supported of course by the underlying macros. At the end of the day, data still from the United States remains relatively solid. Where are we getting the higher yield? In the United States. Other major central banks are cutting rates at the moment. The Bank of Canada, the SNB, the Bank of England are getting closer towards the ECB. Number of central banks are cutting rates where the FOMC is still higher for longer. So this is supporting the greenback to the north. Now, if we look at last week, right? The calendar last week for the dollar, it was late in the week. Focus was on this core PCE number, where inflation did cool slightly. This is the Fed's preferred measurement inflation, cooling down to 0.1, in line with expectations. So there wasn't a massive reaction. Obviously, the previous is coming down from the previous 0.3. I was saying that though, the previous here was revised higher. Okay, so previous revised higher. The personal income, so this is what people are getting paid, their personal income levels, 0.5%. Okay, so that's inflationary, bear in mind. If personal income's higher, what do you think people are going to do with that increased income? They're going to go out and spend money, and that's inflationary as well. And then Chicago PMI data was solid. See, if you look, generally data's still resilient from the United States, not warranting cuts as such, because we cut rates in times of economic downturn, and we're just not getting that. Now, if we fast forward to this week, obviously we're going to be keeping an eye on the big figure, which is the non-farm payrolls at the end of the day, and the average earnings, and obviously the unemployment rate. These three are very important. Ahead of those, obviously, we've got FOMC meeting minutes. We've seen a number of FOMC speakers on the news wires pushing back on rate cut bets. They're still not happy with elevated inflation. And, there's a number of high impact data that we'll watch. But obviously, this is really going to kickstart another, shift to the upside potentially for the dollar. Okay, if these earnings remain elevated, at the end of the day, it's inflationary. If a decent amount of jobs are still being added to the economy, that would be inflationary. And if the unemployment rate doesn't budge and remains at 4%, that's still inflationary. Remember, we need to see a worsening in the labor market for inflation to come down, because if the labor market is still buoyant and solid, there's still people in the workforce, still people getting paid, going out spending, and stimulating, the economy, stimulating prices. These businesses are not going to be putting down their prices if we've still got a strong labor force out spending money. Okay, so when you look at naturally here, the dollar, the next major target area is this mid 106 region, as I say, where we last were back end of April, and here obviously in October 2023. But obviously everything is very much dependent on these figures this week. And obviously we've got a number of labor market figures heading into non-farm payroll. So labor market data certainly in focus, and certainly will re-kick that dollar trend over to the upside, either to the upside or to the downside if it does disappoint. Next up in terms of volatility is Euro. We have a couple of key events to keep an eye out for. We've got the French parliamentary elections kickstarting and Eurozone CPI. If we start off with French politics, first of all, as you know, they announced snap elections because they lost ground in European parliamentary elections to the far right. Okay, there's growing support for far right in France. And remember, when it comes to politics, if we've got far right parties that are gaining momentum and could potentially come into power, that's uncertainty. Just the reason being historically is because the far right tend to have quite radical views, and they could implement radical changes in terms of, shutting their borders, really reducing migration, which could cause problems on an economic level initially. So it's just so much uncertainty because you just don't know how radical their measures are going to be. So that's why Euro had suffered downside within recent weeks. If you look here at Euro, we're going to talk about CPI in a moment, but if you look here at Euro, this was that gap to the downside where the French lost ground in European parliamentary elections and then they announced snap elections, which sparked a lot of uncertainty and worry. Structurally, we have been to the downside for euro. As you can see, we've been printing lower highs, lower lows, lower high, lower low, lower high, and we're still waiting for potentially new lower low. Within the recent week, we staged a bit of a rebound as we consolidate, head into obviously big weeks to come for both dollar and euro, really. Obviously, you can see that consolidation going on at the moment on daily, forming a bit of a narrowing pennant, which obviously could break out either to the downside or to the upside. Now, but outside of French parliamentary elections, we're going to be keeping an eye on CPI. Now, as we know, Eurozone CPI still remains elevated. Okay, look at the last couple of readings. It's come out above expectations. Bear in mind, on an annualized level, the ECB wants this down to at 2%. Okay, before they will start considering more rate cuts. The ECB remain divided at the moment in terms of when that next rate cut's coming. So I don't think we're going to be getting a rate cut anytime soon. Most likely be after the summer if they are going to do it. So the fact is, if inflation remains sticky this week, that's going to support euro, okay? If it comes out higher, then we're going to get this breaking out to the north, okay? But that could be outweighed by the uncertainty of the French parliamentary elections, because if the far right do win, okay, and with majority, expect euro to come under some pressure, okay? Do expect euro to come under some pressure. So you've got a bit of a few things in the mix there for euro dollar. Bear in mind, French parliamentary elections, Eurozone CPI, and of course, all the data for the dollar. So a lot to keep an eye on, guys. The Canadian dollar next up in terms of volatility, because we do have key labor market data. Now, CAD's an interesting one to talk about at the moment, because last week, if you look here, I just want to show you, we had higher inflation from Canada, right? Look, across the board, generally higher. It's stickier inflation. GDP came in line 0.3%, picking up from the previous of zero, no growth. And this is interesting because remember, the Bank of Canada started their rate cutting cycle. Markets were like expecting a potential July cut, but there may be, that's some doubt around that now because of that sticky inflation number, as I just showed you there. Now, this week, we're going to focus on labor market figures, see how many jobs being added to the economy, where's the unemployment rate at, because if these remain buoyant, you know that's inflationary, right? If the labor market's solid, as we went over with the dollar, if the labor market's solid, this is going to be bad for inflation. Inflation's going to remain sticky, and then the Bank of Canada is not going to cut, and that's going to be bullish for the Canadian dollar, right? So you need to keep that in your minds. With dollar CAD, as I said to you guys before, we remain in this narrow range there on the higher time frame, a potentially bullish pennant. We could look at that as at some point, and maybe we get a breakout this week, right? On the weekly here, we're also very narrow, as you can see, and perhaps this is a bullish pennant. You never know. We could get those Canadian figures disappointing, okay? We could get poor labor market figures, which would be good for the Bank of Canada because they can get closer towards rate cuts. It wouldn't be inflationary if the data's bad. You can see narrowing pennant there on the weekly. You can see that nice and clearly there. Also, just ranging there. There on the daily. So I said before, I'd be very interested if we can break down this 138 territory, break out of this pennant, and then I know when I look left here, dollar CAD can really fly in towards sort of 146, excuse me, where we've been in the past. So really do keep an eye on these labor market figures this week from Canada. And lastly, just to note for GBP this week, you see on the calendar, we've got UK parliamentary elections on the 4th of July. Now, I'm not expecting much, and markets have largely priced in the Labour Party are going to win, okay? They're expected to beat the Conservatives, but we're not expecting too much reaction for GBP. But it's just worth noting, in case you see it on the calendar there and freak out, UK elections, reaction should be pretty limited for GBP, but just worth of note there. So plenty of volatility, as you can see on the docket this week, really across dollar, euro, and the Canadian dollar. Have an amazing and blessed week, guys, and I'll see you on the next video.